Good morning and welcome everyone to this Friday edition of Inside India. I'm Sri Jegarajah. Here are your headlines. China saying that the United States has reached out for talks. As the Trump administration races to do tariff deals with several countries, but the US Trade Representative Jameson Greer saying a deal with India is nowhere close to the finish line. And Apple warns of a $900 million cost hit from tariffs as the iPhone maker looks to adjust its supply chains to cushion the blow from the trade war. And Indian software firm Zoho pulls the plug on its $700 million chip manufacturing plan in the country, dealing a setback to the government's semiconductor ambitions. Indian markets join us in about 45 minutes' time. Here's what Gift Nifty futures are indicating for the market open. We're looking at 24,442, so an incline of about 100 points. Let's give you the dollar-India rupee exchange rate at 84.5470. Asian markets broadly are on the incline. There are a couple of cross currents, though. The positive catalyst, and we mentioned this in the headlines, is China says it's open to trade talks, but the earnings picture, especially amongst some of these tech titans in the US, does look somewhat grim. So Apple and Amazon have soured the mood somewhat in these markets. The focus now turns to April payrolls stateside. Now, the latest on the US-China trade standoff. China saying that the United States has reached out to Beijing with hopes of starting trade talks. In comments issued by China's Commerce Ministry just earlier this morning, Beijing said the US has, quote, repeatedly expressed its willingness to negotiate, and adding that the US now needs to cancel unilateral tariffs and show sincerity in reconciling. Soon after that, US Secretary of State Marco Rubio issuing comments that China wants to meet and talk, and Kevin Hassett, the director of the US National Economic Council, telling CNBC that all China's softening stance bodes well for their trade talks.
I'm hopeful that Secretary Bessent, who's shown how good he can be at this by closing the Ukraine deal, is going to be able to help make progress with our Chinese friends. Now, certainly there have been kind of loose discussions all over both governments, and I think that the fact that the tariffs came off last week shows that we're very close to making the kind of progress we need to move the ball forward.
But US Treasury Secretary Scott Bessent saying he's not in any hurry, saying he's working out deals with other trading partners first. Take a listen.
Is it fair to say that we'll see a deal with India and South Korea before we see something with China?
Well, again, Maria, these are multi-step deals because of the de-escalation. Could we see a de-escalation because the Chinese need to de-escalate sooner than the other deals? Perhaps. But the other deals are moving along well. I am concentrating on our Asian trading partners. So we're meeting with the Japanese delegation today. We've had some very good meetings with Korea. Vice President Vance was in India. I had very good meetings with the Indonesian finance minister. So, we are moving quickly.
On the other side, in a Fox town hall, President Trump said he's going to make great deals for America, and India wants a deal badly.
I could set those deals tomorrow and do away with negotiating, but we're negotiating with South Korea, we're negotiating with Japan, we're negotiating with a lot of different, many. India is a very big, they want to make a deal so badly. Okay. I'm not telling anything out of school. We're going to make great deals for America instead of bad.
But a US-India trade deal could take some time. US Trade Rep Jameson Greer says negotiations are still not at a, quote, finish line close, and that he has a standing call with the Indian Trade Minister. Turning now to US tech, Apple shares under pressure in the US extended trade despite beating on the top and bottom line. Tariffs continue to be the major overhang, with CEO Tim Cook warning it's hard to predict what will happen beyond June. Apple expects a $900 million hit from tariffs in the June quarter. China is also becoming a headache for the tech giant. Sales in the country are still down 2% year on year, and it has been moving supply chains from China, though the country will still supply Apple's customers across the world, except in the US. CEO Tim Cook said for the June quarter, more than half of the iPhones sold in the United States will come from India. AirPods, Macs and watches will be supplied from Vietnam. In the meantime, a setback to India's chip ambitions. Software firm Zoho suspended its $700 million chip expansion plans, and the company reportedly struggled to find the right technology partner to advise on the manufacturing process. Indian conglomerate Adani, too, hit a break on its chip talks with Israel's Tower Semiconductor. Reuters reporting that Adani did not find the $10 billion semiconductor project made strategic and commercial sense for its business. Let's talk about these ambitions by India to move up the value chain into advanced manufacturing, and bring in Neil Shah now, Vice President of Research and co-founder at Counterpoint Research. Neil, great to have you on the programme. So Adani Group paused discussions with Tower Semi. Zoho suspended its year-long pursuit of a $700 million plan to expand into chip manufacturing. What do these signals tell us about the challenges to attract private capex and longer-term FDI from multinationals like Apple, Samsung and Tesla?
Thanks for having me, Sri. I think it's still a little bit of drop in the bucket, I would say, with the broader chip ambitions. Obviously, everyone wants to get into the chip game because government is laying out the red carpet and almost giving a 50 to 70% of capex investments, right? So most of the conglomerates are looking to see if they can cash in on this gold rush. So not everyone will be successful because there are limited players in the semiconductor value chain who can lend the technology to you to make a successful operation, and also need to have a big Rolodex of clients once you have a fab or a chip manufacturing unit. So it's a very complicated process, and it's not easy for everyone to set up a chip plant, and it requires a lot of intellectual property as well, which is not available for Indian conglomerates. So they have to depend on someone outside of India, and those are limited players.
Interesting. Neil, from India's standpoint then, and from a policy standpoint, what needs to be done to make the environment more conducive? Is it more subsidies, less red tape, lining up the right JV partner perhaps? Or does it come to a root and branch reimagining of the entire Make in India campaign and policy?
That's a very, very good question and observation. I would say subsidies are already here. The policies are there to attract more foreign players. And that is where I think the issue is, because you have to depend on foreign players to build a chip making unit. There is no indigenous intellectual property framework or a foundation where there are NVIDIAs or future NVIDIAs or future AMD or Intel of the world, or even TSMCs of the world in India, right? So the foundation is shaky. You have to depend on foreign players. So you have to first fix the foundation, do more digital skilling, have universities up, building intellectual property, chip design, chip making. First is the chip design, then you go to chip making. So I think that is the foundational thing which Indian enterprise or government has to do and invest in.
We heard earlier on the programme from USTR Jameson Greer, who said that the BTA, the US-India trade deal, bilateral trade agreement, is not at the finish line yet. But if it does materialise, do you think a trade deal will be a game changer for advanced manufacturing, especially if US investment in production-linked schemes and incentives forms a big part of that deal?
I think so. I believe, first of all, it would be more on the items where US feels the import duties are high, like maybe cars, right? And which would favor in Tesla's camp and so forth. But when it comes to the phase 2 of these deals, I would say advanced manufacturing could be on cards, with Intel trying to gain footing. And manufacturing and having a fab in US is going to be expensive. So the next diversification market for Intel would be India, because the second largest R&D center is in India. So if there is a deal where US and India agree to have someone like Intel come in and set up a fab, I think that would be a game changer.
Neil, just on that point, Tesla CFO Vaibhav Taneja has spoken about India's EV import tax as part of the reason why they are measuring an entry into the Indian market cautiously. Again, how does the taxation regime broadly, as it applies to MNCs, as it applies to foreign investors like Tesla, Apple and Samsung, need to be reformed if India is to see an FDI boom?
Yeah, I think it has to be fair to everyone. Right now, with Make in India policy and the push by government, there are significant import duties on the full units which are imported, whether it's a smartphone or whether it's a car. But if still it's not a level playing field, on phones we still have 15%, 20% duties for the full units. So for cars, it's very high. So there could be some alleviated, I would say, the policy which could help and work in favor of Tesla or some other manufacturers who are looking to come in. And also the JV of 50% with a local player, I think that could also be relaxed for some industries where we already have a very good established manufacturing and local players which are dominating, like automotive.
Piyush Goyal has exhorted the Indian startup ecosystem to think bigger, to think more ambitiously beyond services and generate quality jobs, especially beyond delivery boys and girls, as he described it. What can be done to make that happen and for India to really make that leap into advanced manufacturing? Because human capital is such a big part of this process.
Yeah, absolutely. So there are multiple levels of manufacturing, which for any manufacturing, if you look at phone or a car, there are 7 to 8 steps. Few steps are manual and few steps are automated. So automated can be done without labor, right? But there are few steps which are labor intensive, and that will still depend on skilled labor going forward. So, and obviously India has the lowest cost labor and English speaking labor, which is an advantage compared to other Asian countries, right? So, and also we have a very good, I would say, ecosystem when it comes to other particular technology in the stack, like software and services. So from that perspective, I think there will be still a boom with respect to manufacturing, advanced manufacturing, and India will be at an advantage because it has both technology know-how, English-speaking talent, as well as lower scale, low-cost labor.
Neil, for Apple specifically, what do you think they want to see in terms of lining up all the ducks in India to make it conducive for them to invest and really scale manufacturing and advanced manufacturing in India?
Right. So if you look at Apple supply chain is one of the most complicated. An iPhone has almost 1,000 parts, right? And multiple suppliers, hundreds of suppliers contributing to that. And over the years, within the last 15 years, China has become a humongous ecosystem for Apple. And the Chinese suppliers have also raised in terms of experience curve and sophistication. So they are even better than Taiwanese in terms of overall manufacturing as well as from the cost perspective, understanding the supply chain. And there are thousands of suppliers around the China manufacturing ecosystem, the EMS partners like Foxconn. But to replicate that same in India is going to be challenging, or it would take time, I would say, rather. So we have to, in India, to build an ecosystem around the existing manufacturing players like Tata or Foxconn. And if that ecosystem is ready, then only Apple can move significant chunk beyond China to India. Until then, it's going to be a little bit tough. We'll do only high-level assembling, not advanced manufacturing of other components which are going into iPhones.
Neil, over what timeline, and thank you very much indeed for that clarity, over what timeline do you think that move then into advanced manufacturing could happen? Is this a 3 to 5 year story in which the policy, the subsidies, the JV, all that mix, that entire framework, we need to find that secret source. Is it going to take that long, or could it happen sooner?
Yeah, I think it could take longer. I would say at least 3 to 5 years, because there are, as I said, there are so many components going into a particular Apple product. And if you see, the 50% of the components are very advanced components. So those are chips, which come from Taiwan. There are camera modules which come from Korea, right? And there are batteries coming from China. So to set all those high value components, we need to have a similar setup, or those suppliers have to leave their home countries and set up also in India, which won't go well with their government, local government, because they have been enjoying the subsidies from their government as well, right? And contributing to employment. So it's, I would say, a double-edged sword for these suppliers also to come and set up shop in India. So Apple will have to find an alternative Indian version of those suppliers. And that's why it will take time to reach Apple level scale, Apple level quality and sophistication.
Neil, do the same challenges apply to Samsung Electronics and Foxconn, which already have a footprint and a presence in India to a certain extent? But again, the issue there is one of scaling that footprint and scaling that presence to advanced manufacturing as opposed to just assembly. And what are the challenges inherent in that process? And especially for Foxconn, are there geopolitical issues that make that expansion problematic?
Yeah, for Foxconn specifically, it's both. It's a geopolitical thing as well, with their deep roots in Taiwan and also within China with respect to the bigger ecosystem they have built around their manufacturing facilities there. So that is one. And they have obviously got a lot of support from the local governments and to scale up that, right, and give employment to hundreds of thousands of laborers over there. So moving everything over to India, or at least bigger chunk of it, there are definitely friction from geopolitics point of view. Second is finding and training local talent as well as supplier ecosystem for the just-in-time manufacturing. So that is a big challenge for Foxconn as well to scale up. And also we have to also look at, as I said, Apple is also dependent on a lot of Chinese, sophisticated Chinese partners like Luxshare, right? So Luxshare has grown in over the last 5 to 7 years, taking share away from Pegatron, Wistron, even Foxconn at the same point, right? And then there are other new players like Goatech who are taking away from other manufacturing products of AirPods and so forth. So it will take time for Apple to completely diversify and bring even the Chinese players like Luxshare, which are growing fast in the Apple value chain, to India. And if that does not happen, then Foxconn has to rise up to that level of the Chinese counterparts. And that is tough.
Neil, I just want to end quickly on this issue of talent. A big part of the problem, as it seems to me, is that top tech talent, founders and the innovators who could be potentially the next Satya, the next Sundar, the next Shantanu, are leaving India. What can be done to make them stay?
That's a tough question. As I said at the start, it's more of our education ecosystem and the intellectual property development opportunities beyond the engineering into PhDs. So we have very weak PhD program and intellectual property program. Whereas if you look at US, a lot of folks who are engineers here or MBAs here, they go there for masters and do PhD, and then they go into they take this advanced degree and go into Google, Meta, and AWS and so forth, right? And build great products over there. So, and obviously the pay scale is even higher and they get return on investment for what they have invested in terms of education, time, and so forth. So that entire stack of education is missing in India. That has to be fixed first, and then we can, I think, grow.
It starts with education. That's fundamental. Neil, thank you very much indeed for those insights. So we appreciate your commentary and that analysis. Neil Shah there from Counterpoint Research. We are back in 2 minutes. Welcome back. Japan's top trade negotiator saying earlier today that tariff talks with the United States touched on how Japan could expand trade as well as non-tariff measures. He was meeting with Treasury Secretary Scott Bessent in Washington, D.C., where he repeated requests for the United States to reconsider its sweeping global measures. U.S. tariffs, he said, are costing one Japanese automaker $1 million every hour. He did not reveal the name of the manufacturer. And the tariff war is forcing the Bank of Japan to cut its growth forecast. Lin joins us with the latest here. And Lin, this has implications for monetary policy, and perhaps the BOJ are going to have to rethink their entire tightening bias.
Indeed, and that was really the key message coming out of the Bank of Japan's meeting yesterday, that likely they are going to now be on an extended pause. Economists, though, are pretty divided about when the Bank of Japan can move, given the heightened uncertainty. But let's have a look just in terms of the revisions here, because they were expected, but they were bigger than expected. So if we look at growth for this fiscal year, it was slashed by more than a half. So 1.1% was where it was at for FY26 just 3 months ago when they put out their last outlook report. Now that is down to 0.5% in the updated numbers, lower as well in terms of FY26. In terms of when the Bank of Japan believes that they will sustainably be able to get to their 2% price target, here that's also been pushed back now by about 12 months, with the central bank saying that it's likely to be late FY26. So as I said, really the upshot here is that we're expecting now a delay in terms of monetary policy normalisation, and so much of this will hinge on how the US-Japan trade talks will go. And certainly, as you were just covering there, Sri, we heard about that second round of talks here. Still pretty scant on the details. We are expecting that in about 2 weeks there will be another round here, but it was interesting to hear from the Prime Minister Ishiba earlier this morning saying that reaching a deal in haste is not necessarily in their best interests, and that they have not yet agreed on that common ground for that deal. And, you know, it's very interesting because the US president has been saying different things as well on this point as well, saying great progress made. We're basically very close to a deal. So let's see how it shakes out.
And there's even some semblance of Japan open to the nuclear option as well, which is perhaps weaponizing their holdings of US treasuries, and they have stated so themselves. So with that, Lynn, let's just take a look quickly at the US bond markets and the benchmark 10-year yielding 4.2311, the rate sensitive, 2-year at the shorter end yielding 3.7171. Thank you for that, Lynn. In the meantime, the US is expanding its reach to countries in Asia. United Airlines' first flight to Mongolia landed in Ulaanbaatar last night. The new route is part of the largest international expansion in United's history. CNBC's travel editor, Monica Petrelli, is here to tell us more. Hi, Monica.
Good morning, Sri. That's right. Quite big news for Mongolia, and that is because so few airlines fly into the country as a whole. So to have an airline on the caliber of United coming in 3 times a week, very big for Mongolia's tourism industry. Now, this is a part of a bigger push by United to go to destinations that very few, in fact, none, no other U.S. carriers are servicing. Now, most of these flights nonstop from various cities in the U.S. However, this one to Mongolia is a direct flight. Now, you may be wondering, well, what's the difference? Direct flights, in fact, can stop at a location. However, passengers once on board will take that same flight to the ultimate destination. Now, for these flights coming from the U.S. to Mongolia, they will stop in Narita as part of what's called a Fifth Freedom route. This is a flight that operates between 2 foreign countries that originates or terminates in another, in a home country. Now, I did speak with Noman Chinbat. She's Mongolia's Minister of Culture, Sports, Tourism, and Youth about the importance of these flights to Mongolian tourism industry. Here's what she said.
So we have a big ambitious kind of goal, which is about 2 million tourists by 2030, which will be around $4 billion contribution towards our GDP, which we're hoping to make it about 10% our GDP contribution. At the moment, it's around 3 to 4%. So we want to double it.
And these new flights, they were announced last October, now finally happening this week. However, in the interim, we have seen travel demand, particularly for flying in the United States, start to weaken amid talks of tariffs and a possible recession. Is this something that you're closely monitoring in terms of how this could affect United Airlines' connectivity to Mongolia?
Of course, having said that, Mongolia is a country that is directly having a relationship with our third neighbor, and we believe that it will be somewhat affected, but we're hoping that actually it will not be affecting a service industry where it comes to tourism.
So international connectivity, a key aspect of a tourism strategy that Mongolia recently developed with Boston Consulting Group. That, of course, for a landlocked country with Russia to the north and China to the south. Mongolia now reaching out to other destinations, trying to entice travelers from around the world to visit. It's back to you, Sri.
Monica, magnificent country from what I understand. I haven't been there, but definitely one on my bucket list. Thank you very much indeed for that, Monica. We're back in 2 minutes. Stay with us. Welcome back. You're watching Inside India. Some of the stories that we are keeping tabs on for you today. US Vice President J.D. Vance was on his 4-day visit to India when the deadly Kashmir attack happened. The US has condemned this act of violence, with Vice President Vance coming out to say the US hopes Pakistan cooperates with India against terrorism and that India's response should avoid escalation into a broader regional war.
We've obviously been in close contact with our friends in India and Pakistan. Our hope here is that India responds to this terrorist attack in a way that doesn't lead to a broader regional conflict. And we hope, frankly, that Pakistan, to the extent that they're responsible, cooperates with India to make sure that the terrorists, sometimes operating in their territory, are hunted down and dealt with.
Indian Airlines are bracing themselves for higher costs following Pakistan's airspace ban after the attack on tourists in Kashmir last week. Air India has asked the government for a subsidy model support after estimating losses to reach almost $600 million from the airspace ban. The India aviation industry is also dealing with growth constraints with jet delivery delays from Airbus and Boeing. And in the latest developments from the India-Pakistan conflict, India has vowed to pursue the assailants behind the Kashmir attack to the ends of the earth. Meanwhile, Pakistani army chief has said the country remains committed to regional peace, but any military misadventure by India will be met with a swift notch-up response. Right, let's take a look at the energy complex, and benchmark oil prices are trading to the upside. WTI nudging closer towards $60 a barrel. Brent crude 62, 63, both of the indicators. And the global benchmarks up by about 0.8%. President Trump has threatened fresh sanctions on Iran. Trump warning that any country or person buying Iranian oil and petrochemical products will be subject to secondary sanctions. India had stopped crude oil imports from Iran back in 2019 when Trump first imposed sanctions. And we are counting down to the market open in India. This is how we are shaping up. Let's give you the futures picture once again. GIFT Nifty futures indicating an opening number in the region of 24,450 or thereabouts. That will represent an incline of about 100 points. Dollar rupee exchange rate just a shade above 84.0430. And it is a busy earnings season in India, continues to be. Mindspace Business Parks REIT reporting a robust fourth quarter. Net operating income rising 13% on year, helped by strong leasings and demand for top quality office space. Quarterly distribution rose 39% on year, and the REIT saw its highest ever annual gross leasing in FY25. Let's talk more about the outlook at Mindspace. I'm delighted to say Ramesh Nair is with us, CEO and MD of Mindspace Business Parks REIT. Ramesh, welcome to Inside India. FY25 was a record-breaking year for Mindspace. Are project prospects equally bright for FY26, or are you managing expectations on the guidance front, given the global economic uncertainty?
Sri, I'll give a little more light on our FY25 performance. We had 7.6 million square feet of gross leasing and 4.4 million square feet of net leasing. This is, on both these counts, this is the highest since listing. Our occupancy touched 93%, which is again the highest since listing. And NOI for the full year grew by 9%, and distribution for the full year grew by 15.5%. Now, when we translate this into the last quarter performance, NOI, like you said, grew 13%, and distribution grew 39%. One positive is the NAV has also kind of gone up by 10%. Coming back to the market, Sri, what we are seeing is phenomenal, exceptional office market in the country. You spoke about the overall geopolitical tariff-based challenges. That's an evolving situation. We are monitoring it very closely. We have not seen any immediate impact of this on the lease market, because I was looking at the IPC, International Property Consultancy reports. The first calendar quarter of this year, Jan to March, again, we have seen a net absorption go up close to 60%, and gross absorption go up by around 28%, and vacancy at a lowest in the last 3.5 years. So on all those three counts, markets still look quite steady and stable.
So by the key metrics, and you ran through them, some impressive figures, especially surrounding annual gross leasing, quarterly distribution, highest growth since listing. If the story within India's commercial real estate market is one of robustness and resilience despite the global economic cycle, is there any upside to those figures, or does it look like the peak, Ramesh?
This is definitely what we have been seeing in the last 2-3 years, and we are definitely going to see it much more happening going forward. The growth today is driven by 1,500 global capability centers, which contribute to 50% of the overall demand. What we are also seeing is this huge amount of demand coming from banking, financial services. We are seeing a huge amount of demand from healthcare firms. Tech seems to be growing all the time. Overall, the 100,000 square feet plus deals, what we call the big deals, the overall share of those deals have gone up, and that's been kind of increasing over the last couple of years.
Yes, what you just said there about the premium commercial space was echoed by Embassy REIT last week and earlier this week, pardon me. I wanted to focus on, Ramesh, committed occupancy and net asset value. It's also been very strong for Mindspace. But in an environment domestically within India where business conditions may turn challenging, and we got a glimpse of this during the earnings season, would it be prudent to expect some softening?
I was looking at the same numbers, Sri. Overall, RFPs in the market today across the country, there are close to 28 million square feet of RFPs in the market, of which close to 17 million are in the markets which we have. For us, the good news also, and that's been our strategy, has been that our pre-leasing, our pre-letting strategy over the next 1.5 to 2 years, all the 3 buildings which are going to come up, we have a 1 million square feet building coming up in Pune, which is fully leased to an energy GCC major. We have a 1.5 million square feet coming up in Hyderabad, which is again leased to a banking BFSI global GCC major. So, and we have a 350,000 square feet data center coming up again, which is pre-leased to a large Asia data center player. So from a pre-leasing strategy point of view, that's played out well. So far, the going has been good. Even if something goes wrong, I've seen this happen every time if US slows down, the IT services growth comes down, but
Yes.
The GCC demand kind of goes up. These are inversely proportional to each other.
I'm glad you raised that, Ramesh. And just on that issue of the global aspect of what you do, how would you characterize interest amongst global MNCs in strategic office location in India, because there is a potential US-India trade deal waiting in the wings. In the last few weeks, we've heard whispers that Tesla may plant the flag in India, Apple shifting iPhone assembly to India from China. They will all need to lease office space. Are the floodgates about to open on a commercial real estate leasing boom, or do we have to curb our enthusiasm?
You're absolutely right. So in the last 15 years, office leasing perspective, 40 to 50% of all leasing in India have come from American companies. Today, 60% of the GCCs in India are again American companies. India's cost arbitrage continues. We have space available in India in most the top 6 Indian cities at less than $1 per square foot per month. We still have tech talent, which is available at $5,000 to $6,000 US dollars for an annual salary available in India. So India's cost benefits will continue. Let's look at the worst case. Tomorrow, if there is a tariff put on Indian IT services, today to set up a global capability center of maybe 200 to 300 people, we have run all kinds of cost analysis. It costs only 20% to do a GCC in India compared to a Western country. And that 20%, thanks to, let's say, new set of tariffs goes to 22 or 23. India still remains the best market in the world, and to become the office of the world, like China is the factory of the world.
Interesting, Ramesh. But isn't there a risk that India that's some absolutely stunning metrics that you've alluded to? But isn't there a risk that India becomes a victim of its own success? And you've touched on this: the scarcity of Grade A office spaces in the main business hubs. How are developers approaching this challenge? And ultimately, where does that leave the outlook for pricing and rentals?
So from a net absorption point of view, the market saw 13 million square feet in the first quarter. Gross absorption was 20 million. The supply was around 10 million. The supply is always kept in line with demand. There have been only 3 years, the dot-com bubble year, the GFC year, and the COVID year, where demand overstood supply. Supply has always kept good pace with demand being a little lower than demand. So today there is a number of institutional office developers and REITs in the country, close to 15 of them. And what I've seen over the last 25 years, Sri, has whenever there are uncertain times, occupiers go to more stable institutional players, and we are right there to capture that demand in the market.
Understood. Ramesh, let's move on to strategic acquisitions. Are you looking at tier 2, tier 3 cities? And given the AI and data center boom globally and in India, of course, on the back of last September's deal with Princeton Digital Group, how big a focus area is digital transformation going to be for Mindspace?
We're very focused on acquisitions from the sponsor group. We just completed a big one for 2,038 crores. That's 1.8 million square feet grade A park in the CBD of Madhapur, Hyderabad. We are also constantly looking at third-party acquisitions. We are in the due diligence stage for one of them to close one of them. We are also looking at 5 more of third-party acquisitions. We are also consolidating within our parks, wherein if the landlords of our parks who have done joint ventures with us want to sell, and smaller players who had bought space 15, 20 years back, if they want to sell. So our acquisition strategy is very robust, Sri.
Co-working spaces and that particular sector, is that a challenge or an opportunity, Ramesh, for Mindspace?
I would see that as an opportunity. Today, co-working contributes to around 6.5% to 7% of our portfolio, and we are offering it like an amenity to all our clients. There are 5 to 6 very good players in the country who are doing well, who are all seeing very high levels of occupancy. So we are partnering with some of them.
Ramesh, final question. Congratulations are in order. You now hold the CEO and the managing director titles for a 5-year term. How then would you characterize strategic direction that you will be taking Mindspace over that period of time?
Our business is quite simple, Sri. We need to create loved workspaces for our clients. We need to have a tenant-first mindset. We want to build the best office spaces and the best business parks. Our tenant relationships should get stronger, and we want to increase our retention rates. How do we do that? Some of our buildings are old. We need to keep re-energizing our buildings through upgrades. Today, we're giving a lot more club facilities, better landscaping, better campus facilities, a lot more engagement with tenants, creating more mixed-use facilities, and also how we can hotelize some of our buildings. So that's the core strategy going forward.
Ramesh, just a quick one on the macro outlook, and where do you think the easing cycle is going to head at the RBI, and does a lower rate environment, and how much of a lower rate environment would you like to see to pave the way for higher growth in your space?
It's not just in India, Sri, but across the world, a reduced interest rate will make REITs attractive. Our share price 2 days back, yesterday was a holiday, but day before yesterday was close to an all-time high, and we believe that continuing going forward.
Ramesh, we'll leave it there, sir. Thank you very much indeed for joining me on Inside India. Ramesh Nair there from Mindspace Business Parks REIT. Right, the Indian markets have joined the trading day. We will look at some of the early movers after this short break. The Nifty 50, the benchmark up by just a fraction of 0.3%. Welcome back. Let's take a look at the Indian markets as we round off this week. The Nifty 50, the benchmark, is putting on about 0.4%. Very interesting price action in the currency markets. The dollar under pressure against the Indian rupee to the tune of about 0.8%. Right, let's do a deeper dive on some of the movers in the Indian markets today. Let's take a look at shares of food delivery app Zomato's parent company, Eternal. Profits dropped nearly 78% in Q4 as it funnels cash into the expansion of its quick commerce arm, Blinkit. But no 15-minute deliveries on the Zomato app. Now, Eternal is revoking the service just months after it launched. It used to deliver food from restaurants within 10 to 15 minutes, like quick commerce. So you're going to have to wait a little bit longer. Right, Q4 profits also dropping for Adani Enterprises. Weak profits in coal trading division. That hurt the flagship firm of the Adani Group. Overall revenues dropped 7.6% on year. The shares, however, are up by about 1.7%. And in the meantime, overall auto sales also muted during the fourth quarter in India. 3 of India's top car makers sold fewer vehicles to dealers. Maruti recorded a modest 0.6% rise, while Tata Motors and Hyundai saw sales slump. However, there was still high demand for Mahindra & Mahindra's SUVs, boosting monthly sales by 28%. Good day for the automakers, with the exception of Hyundai Motor off just fractionally. And big event getting underway in India today. Leaders in the world of media and entertainment are gathering at Waves 2025 in Mumbai. CNBC TV18's Shilpa Ranipeta is on the ground and joins us now. Hi, Shilpa.
Well, hi, hello. I'm live here from Mumbai at the World Audio, Visual and Entertainment Summit. That's the Waves 2025. And that, they're saying, is setting the stage for what is set to be the new era of digital and creative storytelling. Now, one message here has been clear that India has 1 billion stories to tell, and we're inviting the world to come and make India its content playground. There are over 10,000 delegates from over 90 countries coming here. And yesterday, while inaugurating the summit, the Prime Minister Narendra Modi said exactly that. He said that Waves will be a bridge between Indian creators and global storytellers, and he invited investors and creators and storytellers from across the world to come and make India their content playground. Now, we also had a keynote from the Reliance Industries chairman, Mr. Mukesh Ambani, who called entertainment as India's real power. And he emphasized on the strength that India has with respect to its digital infrastructure that we can offer here to the world. We also had the YouTube CEO, Neil Mohan, also speak about the creator economy in India and how they are now investing 850 crores here as they see massive potential to grow the creator economy further. Interestingly, we also spoke to Adobe's Shantanu Narayan, who also spoke about the massive potential in a conversation with CNBC TV18 yesterday. He said that there are 1 billion creators here in India, and Adobe wants every single one of them to tap into their creativity using Adobe's tools. Well, here's a slice of that conversation. Let's listen in.
You know, when we were first introducing Firefly, we were looking at the traffic and where the traffic was coming from. And there was an incredible amount of traffic from India. Yeah. And then one week, the traffic suddenly subsided. And the team in the US wasn't sure what it was. But as a cricketer, I knew it was the World Cup. India was playing, you know, the final. And so that just shows the volume of traffic from Indian creatives is immense. And so we've been thrilled with the adoption. We've been thrilled with how they're adopting it for local. But, you know, this market will continue to be a really important market for us moving forward.
Well, that was Shantanu Narayan talking to me yesterday about India's potential. Now there are 2 more days of the event that is left to go. Today we will see, chairperson of JioStar, Ms. Neeta Ambani, also speaking here. We'll also have the head of Meta, Adam Mosseri, the head of Instagram for Meta, Adam Mosseri, also speaking. Many more conversations over the next 2 days that are going to talk about India's potential of being a massive audio, visual and entertainment industry, not just for the country, country, but for the globe. Many speakers from across the world also coming in. We'll also have the Ted Sarandos from Netflix also speaking tomorrow about the opportunity here in India's OTT space. In fact, that's also something that the Prime Minister alluded to yesterday as to how the OTT landscape in India is also exploding and the kind of opportunities that there is. So a lot of conversations now over the next 2 days will continue, and we're hoping that Waves, as its first edition, will set the stage for many more such summits to happen down the line, and for India to open its doors not just as a country that consumes content, but also with 1 billion stories to tell. It wants to lead the world's creator economy. With that, it's back to you, Sri.
Shilpa, thank you very much indeed for that. Always great to hear from Shantanu, and it's a great narrative. Thank you, Shilpa. Back home here in Singapore, it is election time. City-state votes tomorrow. JP Ong is with us with a preview.
And political stability and economic continuity are the big questions whenever the city-state goes to the poll, at least that for markets and for businesses that look to invest here. And so far, based on the election history of Singapore, we've seen that is a near certainty for the ruling People's Action Party. In fact, if you look back to 2020 during the COVID election, you'll see that they only gave up 10 seats to the opposition, meaning they won 89% of the parliamentary vote, meaning that they have that supermajority that they've had on lock since the country's founding. But it's a little less smooth or consistent, actually, when you look under the hood, Sri, because when you look at the popular vote, there are questions to whether or not that overwhelming mandate is indeed being eroded. Take a look at this chart, for instance, where you'll see that in 2020, we saw it actually fall to about 61% again. And this is also just something that points that perhaps there is work to be done by the ruling party to try and make sure that their mandate is strong and gives an opportunity to opposition parties like the Workers' Party to come in. Now, one thing that's been called out actually in the short election or campaigning period actually from the People's Action Party is that they're looking for continuity and that they need to make sure they have a strong team that can head Singapore and represent Singapore with the tariff talks and also with regards to the economic uncertainty. But the Workers' Party has said that they do believe that no one is irreplaceable in this period. And in fact, there are some who believe that some key ministers might actually be coming into hotly contested places where their win is not a done deal. If you look at certain areas like Punggol, for instance, where the Deputy Prime Minister Gan Kim Yong has been moved to, Sri, he is actually going up against a very popular Harpreet Singh there, which means that his position as DPM might actually be at risk. You look at Tampines, where there are 4 parties contesting this particular GRC. It's also a bit of a toss-up actually as to whether or not the PAP can hold on to their mandate there. And again, you look at other places like East Coast and also the West Coast. Also, these areas also seem to be up, which means that the Workers' Party could actually widen or deepen at least their presence in Parliament, and thus also lead to more diversity. But now the question is, does Singapore need more diversity in their political scene, or do they need more unity during this time? That is only a question that Singaporeans heading to the polls tomorrow can answer when the vote is cast, and we'll find out more by Monday.
Excellent, JP. Thank you very much indeed for that. Australia is also heading to the polls tomorrow. Centre-left Labour government is trying to retain power, led by Prime Minister Anthony Albanese. US President Trump and his policies are looming large, with a recent poll showing that Trump's policies are among their top concerns. Comparisons with Trump have also weighed on the popularity of opposition leader Peter Dutton. Right, on that note, that's all the time that we have for you today on Inside India. Do keep watching CNBC. Dan Murphy and Access Middle East is up next.